the Market Wolf, where I give you the best bear case, the best bull case, in my opinion. Right now, we are looking at the monthly, and we are looking back at 2008. We want to take a quick review of what happened back then. You can see on the monthly that even on the monthly, we had the 20-day EMA cross into a bearish divergence. We almost had the 50-day cross in the monthly in that bearish divergence. I want you to take a look at the exiting volumes. Here, exiting volume about 5.4 billion. Here, exiting volume about 6 billion. Here, about 5 billion. You look here, we're at 11 billion. You look here, 6.8 billion. Right here, 7.276. These are some fairly large numbers back from 2008. Now, we have not gone into a bearish divergence on the monthly yet, but we are definitely curling down. Price is headed towards that 50-day EMA. You can see that we've basically been having what essentially amounts to like a drop with some flagging, and now we're on this continued drop. We're only halfway through the month. We only have 1.172 billion exiting thus far. I just want to zoom out on this volume so we can get a good idea of what has been happening here with this move up. And I'm going to put a trend line on here for us to take a look at because that's important. And let's just take the exiting volume that we've had and maybe right about, let's say here, maybe that's fair, right? Look at how you had all this incoming volume and then outgoing volume. So you essentially had a lot of people exiting the market back then. And then you have another downturn here. But I want you to see what's been going on overall. Look at the price overall, right? This is just basics. This is basics. Look at the trend overall. Price has been going up. Essentially, I know that's not a perfect trend line. That's not the point. But what I'm illustrating there is price has been going up significantly, right? And what has volume been doing? Well, volume overall has been going down, right? So we can see that here. Except for this huge spike of exiting volume in February. February was telling us a story, wasn't it? So what? In February, what was it, 5 billion? Let's see. Yeah, almost 6 billion, 5.9. Well, what happens when you have increasing price on decreasing volume? Well, that means you're about to have a major collapse in price. And when we look at that volume profile, you think back to 2008, just before, as we're going through the financial crisis, what happens? Well, we still have a lot of exiting volume, but then we have a bunch of funding money pumping into the system. But you still have all of this decreasing volume, generally speaking, over that time. So this just looks like a recipe for disaster, and I have a feeling we are just getting started on this when you take a look by comparison to where we're at right now. Now, the question you have to ask is, do we have that many people, do we have that much volume that can exit the market at this point? Maybe not as much, but if this is a blow-off top, could we come all the way back down to levels that we've seen back in 2020 with COVID? Well, I think that was where a correction wanted to take place, and I don't think it was necessarily just because of COVID, although that certainly exacerbated things. And if you look back at 2008, you have to start wondering, I mean, how much of this do we get rid of now? I really think it's possible, call me crazy, but I think it's possible that we could really come down and test these levels from post-COVID to pre-COVID. That wouldn't surprise me at all if we saw something like that happen. Let's take a look at the 1 week. And when we look at the weekly, we can see the exiting volume is increasing every week. Okay? So we have increasing exiting volume on the weekly. Let's take a look at the 4 hour. On the 4 hour, generally, if you look at it, we had increasing volume. Now we have volume decreasing again. We do have this incoming volume here. This kind of leads us to that flagging we see, and then the move down. Could we see some more flagging? It's possible. Let's bring us down to the 2 hour. Now, I know on the daily we've started the bearish divergence on the EMAs. The 20 has crossed the 50 for sure. I think on the 2 hour we have made a total bearish divergence, so it's certainly confirmed on the 2 hour that this is it's going to be a big move down. That doesn't mean we're not going to have flagging throughout. That doesn't mean that we're not going to ride up some. That doesn't mean we can't come fill these gaps at some point. In fact, I'm watching this red zone right here for a potential bounce off of any of these Fibonacci circles that I have here. Remember, I told you that we could. This is the 2 hour, so it's difficult to see here. Here's a trend line, downward trend line that I extended out from that previous descending wedge we were in, because the base of that made up a descending support line, and we've broken through that. I want to take you to the 30 minutes so you can see just how perfectly we are following these Fibonacci circles that I've set up for us. And remember, I told you, I was talking to you about here intraday, and I said we could keep going, and then we could touch down this purple line, maybe get a bounce. We did. I also warned you to watch for a breakthrough, and we did. Now we've come and we're hanging just above this blue fib circle with a little bit of support there. That's interesting. However, we are below the 20-day. We're below all the EMA lines. That's not good. We have massive exiting volume at the end of the day, 2.56 million. A little bit of incoming, well, more than just a little bit for, market close. And you see kind of a hammer candle here. That makes me think that, that makes me think that you could have maybe a little bounce on open tomorrow. Maybe people are thinking, maybe this is finally the bottom. Maybe most of the pain is over, or maybe at least we get another bounce before we continue down. That is a possibility. But right now, everything is looking incredibly bearish. I do want to turn on the old MACD here, if it'll let me. Yep, no, they've gotten rid of my indicators, which I don't like. I don't like they got rid of that. Let's get rid of Let's get rid of the EMAs because we know what's going on there. Let's bring up the MACD and take a look. Oh, no, look at that. I've got two MACDs up. Okay, well, that explains that. In any case, we could be beginning to rotate to some upside now. And that would make sense. Definitely. I think we are potentially looking at, and we got up the RSI too. Wonderful. See, these things just disappear on me. I would say that tomorrow we're having another bounce up, another ride up. I think we could ride up this some more, you may actually see us complete. I'll just tell you, the bear case, I think, is that, this fails immediately and we don't have volume coming in. We ride this temporarily and then we just fall through and maybe bounce and ride this fib line down to this fib line, right? So we could see down to 354, like I think on the bear case with some flagging. This is still a significant drop for the S&P 500. I mean, it's not crypto, right? But it's still a significant drop. And then I think, on the most bullish case, you could see us begin to kind of work our way up here and maybe complete a cup right here. But then I think there's so much fear and uncertainty in the market that, again, we just spill out. Okay, and let's see, is that, where are we at? 15th, 16th, today's the 16th, 17th. Okay, that kind of brings us out to the 21st. So, that really needs to be, let me just pull this back a bit so it makes some kind of sense, right? So, So yeah, generally right about there, and that's that's my opinion. We'll call that my opinion because that's actually what that is. And it's probably really your best bull case too, but I'll give you a bull case scenario that could happen just in case we see something play out that's a drastic move to the upside, since this is a bear market and that could potentially happen. Let me change my color. Thank you. We'll make that purple. So that's generally what I'm thinking right there. And that would also fill this gap. So for your best bull case, you could, I think it would kind of play out as part of my case in the bear case, where you also ride that blue fib line, but then you could have a big spike up, put on a handle here. People may feel good about things again, like maybe we're seeing bottom, and then you could get a jump up, and you could actually fill in this cup all the way up here at about, the 389.45. My case, I think the highest you go is about, let's see. I guess on my case, you could actually go all the way up to 383.63, but maybe somewhere in that zone of 378.56 to there. And then, of course, the best bear case for tomorrow, I think you could be headed down to that blue fib line, breaking that other purple fib line, which would put you at about, $355.47. So that's what I'm thinking on all three of the cases. I do tend to think that we'll see some flagging tomorrow. We'll see some upside first, and then we'll see a breakdown. I do want to change this color right here to green so we know what we're looking at. So just be on the lookout. I want to take us briefly here to the VIX, and I want to show you our cases playing out still. Look, we're starting to hit some upside momentum here, and what's interesting about this is we're hanging at the top side now, right? Now that's something to pay attention to. Also, I found kind of a new support here, kind of a symmetrical triangle within a symmetrical triangle on this rise up. We could begin to really tighten and contract through this area, so really maybe between $27.89 and the $33.37 mark, all the way up to the top of that symmetrical, really, which puts us at about 35.05. So, but I think we could see that coiling that's been happening really begin to tighten up here. We're going to have to pay attention, because as soon as we get to the top side of this triangle, and we were to get support there, and then we get another bar. So what you would want to be looking for here, if you're going to go in on something like UVXY because you're waiting for the big move to the downside on the market and you want to see the VIX just explode. Let me take you out to the, we are on the daily. Beautiful. Okay, so let me zoom out so you can see this a little bit better. Okay, and so what you're going to be looking for is, you're going to be looking to complete these cups up here. Now, this cup is from 2020. This cup up here would be completed. You can't see it. It goes all the way back that way, but that would be back in 2008. The question is, do we have that much volume that can exit? We've been having already really just massive exiting volume. So I don't know if we can actually complete these cups. Maybe we can come close. That's something to pay attention to. So maybe I'd be looking at some of the previous zones here, like maybe the $76.80 level on the VIX. And essentially what you're going to be looking for, and this is going to be huge comparatively speaking, right? But you're going to be looking to get on the top side of this triangle, right? You want to see kind of a double, and then like this is, you got support here, you want to see support, and then you want to see confirmation. Now, I do understand that I'm on the daily here, so that's going to look a little bit different on the 30-minute. Like perhaps it rides the top side, but then we get bullish. But you still, when we get bullish, you want to look for one candle on top of another candle like this that's green before you see those boom boom candles. And the other thing you want to be looking for is on the volume. And of course, I don't have my volume indicator up right now, but on the volume, of course, you want to see the same thing too, right? You want to see like volume beginning to go up, and you see a couple of bars like that, that tells you that this may be coming on the volume, right? So that's something to pay attention to, and that's really what you want to be looking for on the VIX. If you want to play some stock, or you want to do puts, or you want to play something to the downside, like you want to play UVXY or something like that, or if you want to do VIX. So that's kind of what you're looking for here. Remember, I started this symmetrical triangle here. I'm as far as I know, I'm the only. Now, I'm sure I'm not the only one, but I watch a lot of other market channels, and I've been watching them for a while, and I've never seen any of them actually come up with anything like this. And as a matter of fact, something I noticed is that when I was really having issues calling the market, unfortunately, I was being influenced by other people and other channels too much. And the times that I was calling the market point to point all the time, I wasn't listening to anybody else. I tuned out all the noise and all the BS and even the Fed and Fed meetings, all that stuff. I just looked at the charts and I was just the wolf. And that's kind of what I'm trying to go back to. I'm tuning out all the noise. I'm just telling you what I'm seeing here and what I'm thinking. I'm not really watching these other guys anymore because, they're wrong. I mean, there was some guy the other day, like right up here, right in this area, and he was saying that we were about to have a big bounce. And clearly that didn't happen, right? So, I just realized at that point, I don't know why I'm listening to these other guys. I'm better than these guys, and I've been better than these guys. That's why I started my channel, and I need to tune out the BS and focus on what I know I can do. So, I mean, this is just what I'm thinking. This is what I'm feeling. We got to pay attention to these areas right here because that's basically the spectrum that you're going to be looking at for your moves coming up on Friday. So, potentially all the way up to 392.20, flagging at about the 388.32. My case would bring you up on this blue fib circle, and I told you those levels already earlier, and then, of course, I told you the bear case earlier as well. I do want to take you now to the, this is important, I want to take you to the daily. This is something I've been wanting to look at. Actually, the monthly, I think. Let's do monthly. Or was it week? I may have been looking at the week, but I'm interested to see this on the month too. I want to look at this right here on the MACD. Yeah. See, this is exactly what I was thinking about on the MACD. Let's move us back. I want to get a view of 2008, right, on the velocity. So, I mean, 2008 we had massive exiting volume, but now we have this blow off top is what it looks like is happening here because we've had exiting volume on this entire rise up, which is really interesting. But if we take, let's just take where we were in 2008, like at the height of 2008 with exiting volume. Look at this. Look at this. Look at the momentum to the downside, right? And I get the sense that right now we are just getting started on momentum to the downside, especially if we take a look at this as a monthly picture. And I've shown you this once before. I mean, look at that. We are really just getting started, and what's happening right now on the monthly does not hold a candle to any previous momentum to the downside. I think this is going to be a massive blow off top. I think this incoming volume with this momentum upward, it was fluff, because you look at the whole history and the whole case in the S&P 500 going back to those old dates like I showed you at the very beginning of this cast. And I think, I don't know how much exiting volume we can have. It may not be as much as before, but I think the downturn is going to be way more violent. And so that's something to keep an eye on, and that's why we need to pay attention to the VIX and where we're going to make our entry and exit. 'Cause I'm personally looking for an entry right now. I wish I had been in on this drop down. I got faked out to the upside. I would take you to the 30-minute and show you where it is, but I'm sure you're perfectly aware of where that happened. I really thought we were going to get some support and try and backfill a couple of areas before we had that final drop. And again, I shouldn't have been listening to anybody else. It's actually cost me money listening to other people. Not in the sense that I've lost, but in the sense that I've lost out. I'm very conservative, very careful with my money. I make more money than I lose in the stock market. And I'm playing the volatility stocks, and that's not an easy thing to accomplish. So, but yeah, you look back on the 30-minute, and this is essentially that drop I've been waiting on. I rode that drop out, and then right about here, that day, right about here, I exited down here because I still have my marks here. I saw that the market was shifting and we were moving up, and that looked like we could have been putting in a W reversal, so I exited, and then the following day we gapped down, right? And then ever since then, it's been gap down, flag down, gap down, because on UVXY, of course, you've been rotating between about 15 and 17 bucks, and trying to make a good entry there can be difficult. So you have to look for that entry on UVXY for the long game, and also for the short game by looking at VIX. I'm not sure how well UVXY is going to perform. If you have some, I do have a sense of it, but maybe less than what I thought of it before. You can go back to episode 1, so I showed you that could potentially get up to, I believe. Well, go back and check episode 1, so I don't want to be wrong about that. But go look at the measured moves in episode 1 for UVXY, and what you could potentially make on, a drop down if you play it perfectly. But I'm just waiting now, waiting for the right time. So that's the bear case, that's the bull case, that's my opinion, that's the broad market overview. Please hit that like button, subscribe, share. We will see you next time on The Market Wolf.